Good afternoon, everyone, and welcome to today's Payments Association webinar on the evolving world of wallets in partnership with PaySafe. My name is Kate McKenzie, and I'm Head of Production at the Payments Association. Before we get started, there's just a little bit of housekeeping. So you can submit questions today to the speakers by typing in the Q&A tab in the control panel at the bottom of your screen. You can send in questions at absolutely any time, and we'll pick them up as we go. You can also ask the questions anonymously if you wish, but obviously please don't go too rogue. Please avoid using the chat box for questions. It's much easier for our speakers if you send them in via the Q&A tab. If you do have any technical issues, feel free to send a message through to either myself or Christina Gatens from the Payments Association using the chat box. I would now like to introduce Hugh Kingdon, consultant and advisor and an ambassador for the Payments Association, who will lead today's webinar. Hope you enjoy, and over to you, Hugh.
Perfect. Good afternoon. Welcome. Thank you. I am your moderator today. It's the first time I've done it, so please be gentle with me. Thank you for the introduction, Kate. I'm an independent consultant. I used to work managing Revolut's commercial card payment activities. I've worked for Visa, where I met a lot of the people working with the Payments Association, and I pioneered Visa's approach to fintechs globally. And I also was a sponsor of the Payment Association's Women in Payments workstream, amongst other things. I'm also ex-MasterCard, Barclaycard and Mondex. And some of those things may come in useful. And that's certainly where I met our first of our speakers. Please let me introduce Aya Gans, partner UK payments leader at EY. Aya will give you an overview of wallets, their benefits, and why the regulator initiated this work. Welcome, Aya. I'd also like to introduce you to Mike Mercado. Mike is Director of Product Management for Discover. Mike, coming from Discover, will help us look through this subject and take a look at the consumer and the issuer perspectives, and he covers both parts. Welcome, Mike. Lewis is our next guest presenter. Lewis Horder, Director of Sales, FinTech and Financial Services for PaySafe. He will give us the merchant and acquirer perspectives. PaySafe are also a digital wallet provider, so we can also address that perspective. Welcome, Lewis. Next, we've got Chris Hill, who is a fintech lawyer partner at Fox Williams, and will share with us the regulatory perspective. And then finally, we'll actually go back to Aya, and we'll take a look at the evolution of wallets and how they intersect with other business models, and A2A, a particular focus to A2A at the end. So, welcome to our panelists. We'll go through to each of them in a second, and they will walk through their specialist areas. So let's begin. In the beginning, when the internet was young and shopping online was still very new, a few brave souls or foolhardy people used to type in their credit card numbers, it was all credit cards in those days, into a few web shops to buy stuff more cheaply. They did it with no security. None. Nada. PayPal, a company originally tried to solve the payments process in America, started in 1998, but they quickly moved on to trying to solve that problem. But other companies failed. Why was that? It took Apple to really kickstart digital wallets and the face-to-face payments much later in 2014, and also in 2014, the first host card emulation for Android was trialed. But why were these companies successful when others failed? What did they bring? What made the difference? And are those same factors that made them successful now bringing us to the point where they're having regulatory attention? Let's ask Aya Gans, partner and UK payments leader at Ernst & Young, to give us an overview of the ecosystem, how we got here, and the role wallets are playing and not playing. Over to you, Aya.
Hi, thank you, Hugh. I wanted to talk about the rapid rise of digital wallets. Digital wallets became very popular with consumers, but also merchants. And over 3/4 of UK consumers reported using a digital wallet in 2024. And we're seeing some incredible stats in the UK alone. 47% of adults are using it in 24, with only 17% reported back in 2017. We're seeing adoption of digital wallets across online purchases, but also in-store purchases. So in terms of online e-commerce world, the adoption of digital wallets is around 38% in 23 and projected to increase to 50% in 27. And for in-store purchases, digital wallets accounted for 14% in 23. And that number is likely to rise to 30% by 27 or more. The digital wallet market in the UK has seen significant growth, and it expanded from 92 billion to roughly almost 300 billion by 2028. And what is driving that growth that we have seen? I think there are multiple factors, but at the very heart of it, there are significant benefits that are offered by digital wallets to consumers and merchants. Digital wallets are versatile and easy to use for your online shopping, for in-store purchases, but also for person-to-person transactions. They offer faster, very much a safe and convenient checkout options online and convenience. And I think that is driving that rapid rise. In addition to that, wallets provide a number of value-add services that are very popular with consumers. And I think with that, I think we're going to continue to see the rise and the widespread adoption, and also the enriched functionality within digital wallets going forward. Hugh, back to you.
So, Aya, there seems to be a virtuous circle here between the having more consumers and more merchants. What gets you more consumers? What gets you more merchants?
I think the value of user experience and the convenience that offers is a key driver in driving that adoption. And I think it's obviously quite evident based on the volumes that we're seeing and the rise of the value and volume of transactions.
Thank you. Let me pull in Mike at this stage. Thank you, Aya. Mike Mercado is Director of Product Management for Discover. Mike, as an issuer, your consumers are using these digital wallets on and offline. What do consumers need to consider when using digital wallets?
Yeah, I think, as Aya mentioned, there are a lot of benefits to digital wallets in terms of convenience and security with tokenization. I think for consumers, they have to think about access. And by access, I mean, does their device support it? Do the merchants that they prefer to shop at accept the digital wallet, either in store or online? I think the other key considerations are some of the benefits that they're receiving with their card product, let's say a credit card benefit. Are they going to continue to receive those benefits with the digital wallet? And particularly for stored payment or stored value use cases, the transaction to load value onto that stored value wallet, you may not be getting benefits for that. And then when you're spending using that stored value form factor, you may not be getting the benefits there. The other consideration on the security side is who has access to your device, who has access to your account, right? Those now become payment vehicles, right? So a person sort of using your phone could go and purchase something. A person who has access to your online bank account could provision your credentials to other wallets. So I think those are additional considerations that consumers need to keep in mind with digital wallets.
And is it always clear, Mike, when there's a problem, where the liability sits? Who should the consumer phone when something doesn't happen, the transaction fails, or the goods aren't delivered, or the goods aren't good enough in some way?
Yeah, I'd say that's probably one of the biggest opportunity areas in the ecosystem. You have, the Manic model itself is already a little bit complicated when it comes to liability. When you layer in the OEM device manufacturer, the operating system, the wallet provider, right, and all of these other players, it adds one to it adds to the additional points of failure where things could go wrong, but then it also adds to the complexity of, depending on what went wrong with who, who sort of to blame, so to speak, for that. And, liability is a hot topic, I know, in our industry. So I think that is a challenge for consumers in understanding who should be helping to make them whole when something goes wrong. They don't care about how complicated the ecosystem is. They just want, they want their product, they want their refund, they want their account made whole.
And is this something that the individual players each need to solve for themselves? So I make a payment using PayPal with my Visa card at a merchant X, or is it something that do you think that the regulator needs to help shape some consistency in how that individual transaction, but all transactions cope with these kind of issues?
Yeah, I think that's a tricky one. I subscribe to like the invisible hand sort of philosophy, and like the market should help create an equilibrium. I think, that's not always the case, and this could be an environment where some regulatory structure could help to facilitate partners in the ecosystem working together in a more standardized way. I think regulatory intervention also could come with some risks, right? Regulators aren't always the greatest product designers on things. And so, it's a trade-off. You don't want to create more complexity, more barriers that are going to create lock-in for, incumbents on things. But definitely, if there are ways that regulations could be crafted to create more consistency in the consumer experience, I think that's probably something that would be beneficial.
And with your international perspective, do you see differences between the different markets in how these things are playing out?
Yeah, absolutely. I mean, both from a regulatory standpoint as well as from a digital wallet adoption standpoint, right? So markets that maybe were a little bit behind in terms of payments infrastructure in the past have really skyrocketed in terms of their digital adoption. I think the regulations around some of those things to create more competition surprisingly feels a little bit softer. Markets like, the US and the UK and EU, I think where they're in sort of a similar place in terms of 40 to 60% adoption of digital wallets, feel like they're in a similar place regulatorily in that, there's a handful of players. We're trying to figure out how to make sure that things are fair. But my hypothesis is regulations may not change preferences, right? Like we can create options, we can do all those things, but changing consumer preferences is a harder problem to solve.
That's fair. And can I ask you, because you're obviously a very big issuer, one of the biggest issuers in the world. Some of these wallets are good for you. Some of them are bad for you. Some are competitors and some charge you fees. What's your perspective on this as an issuer?
Yeah, as both an issuer and a network, I think, criticizing anyone for charging fees is a tough position to take. And, I wouldn't say that any partners are bad. As an issuer, and as a network, we want to make sure that we are wherever our consumers are, and we want to, enable that. Typically, working with wallets is going to provide favorable spend behavior, and so it's going to be a net benefit for us, even if the economics differ from partner to partner. A lot of these partners bring with them large user bases also, and those large user bases have, favorable spending habits. If there are alternative ways that we can, engage those consumers and get them, get that default spend behavior with those consumers that are less expensive, we're always going to explore that. But I think the way things are working in the ecosystem now, it seems to be a net benefit for us and our partners, in that, right, they're selling more devices, having more, users on their operating system. We're maintaining that share of wallet, preventing attrition, right, all the things that we're most interested in as an issuer as well.
So you're really it's the all incremental camp rather than substitutional.
Yeah, I'd say that's fair.
So, I mean, you'll obviously have been following what's happening in the EU, and the EU regulator has decided to try and promote competition by opening out certain services. As an issuer, and if Discover were to get access to those services, would it be easy for issuers like you to build a wallet?
Yeah, I think technically easy, relatively speaking, yes. It's a solved problem, right? We're not making it up from scratch how to build a wallet that's capable of making payments. easy in terms of getting merchant acceptance and getting users to change their behavior. I think that's a harder problem to solve. You know, the Apples and Googles of the world have done a good job of, I think, expanding beyond the device and also sort of in the pay button space and creating seamless integrations there. And for consumers, the convenience of aggregation, I think, is something that adds to the value proposition of those platforms. And as you know, every few years, it feels like, right, issuers like us kick the can on the idea of creating our own wallet. And the hurdle is always changing that behavior, getting the consumer to adopt another app or use the app more regularly probably comes with a pretty high promotional expense. And that's going to make the sort of lifetime value on that consumer upside down in most cases.
Yes, I've been involved personally in a number of projects which have tried to do that, and it hasn't always gone well. Let's leave that one there. It's really expensive. It's really hard to persuade a merchant to have a fifth, sixth, seventh button on their merchant page, in addition to the buttons that they already have, and
Yeah,
even harder then to get the consumer to press it.
Well, and that's the competition should breed more innovation, but competition can also create so much fragmentation that it's harder for everybody in the ecosystem. The consumer, because now they have to pull up, 5 different apps in a shopping day, depending on the use case. For the merchant in creating acceptance, for the networks or issuers also, right, where we potentially have these bespoke integrations with partners. So I think there's, pros and cons to competition.
I think we should hand it to not to PayPal. Oh, I've done it, we definitely should hand it to PayPal, but we should also hand it to Klarna. They've done a fantastic job actually getting their button on websites with a completely different business model.
Yeah, that's a hard thing to do.
So we're now nicely segueing onto the merchant perspective. So please let me bring in Lewis. Lewis Horder, Director of Sales of FinTech and Financial Services for Paysafe. As an acquirer and also as a wallet operator representing us today with the merchant point of view, what do businesses need to consider when building or adopting wallets into their offering? Lewis?
Yeah, I think that's a really good question. I think you've got to pull it back, I think, first and foremost for a business. So think of, say, a retailer, an online retailer. So essentially they're looking to sell, obviously, but they're looking to capture the attention of that customer and make it very easy for that customer to do business that form part of that. Payments is a really important one. And so then I think we need to think about what are the payments priorities for that business. As we talked about earlier, what does that customer, what does that consumer want, or they expect it more and more. But they also need to feel safe and secure as well, right? So the merchant needs to understand, I think, how their customers want to pay and what are the relevant payment methods for that sector or for that geography. And that might differ. That might differ quite a lot, clearly, between geography. But, even in UK, which is a fairly standardized market, I would say, from a payments perspective, there's still big variances. I mean, look at our own wallet, Skrill. That's kind of very popular within certain demographics, gaming, gambling, etc. So they need to understand those first of all. Then they need to embed them very well, but they need to understand how they work as well, what they're bringing. We've said are increasingly forming part of that. So, when a merchant is embedding a wallet, that there's plenty to talk about or think about, but a couple of really key things I think stand out. One is on the UX side. So you've got to nail the UX basically. So you need a good integration with a partner that supports the wallets, but you need to leverage the plugins as well, the one-clicks, the integrations with e-commerce platforms, shopping carts, etc. Especially mobile devices where these are commonly used. You've got to streamline that checkout experience as much as possible. You've got to use that to drive the conversion rates. So you've got to get that front end right. And then at the back end as well, you've got to work with payment processors who are capable of not just handling the wallet payments, but essentially making that work really well. So not just the auth settlement perspective, but good reporting, good reconciliation, and then from there be able to take from that the analytics behind that. So track conversion rates, track customer preferences, is look at when these wallets are being used by who, how are they being used, and then feed that into marketing, analyze patterns, and then you can use that as personalized offers really. So it's not just offering wallet, why you're offering them, you take the take the analytics from that and kind of maximize the use of that wallet.
So in terms of the analytics, what's important? Is it just purely the completion rate, the number of people coming through and then the completion rate, or is it more to it than that?
Yeah, so you've got to make payments. So yeah, it can be that. You've got to make payments work smartly. So, you know, think back to that priority with payments. It's kind of capturing that customer's attention and then making it easy for them to pay. So that conversion rate will be a huge part of it. But I think the analytics part is more right. Okay, who are the, you know, are they used the 40?
I'm sorry, Lewis, you were breaking up a little bit.
Anyway,
Can we come back to you in a little while, please? Thank you. Let me move on to Chris Hill, if I may. Welcome, Chris, and I hope hopefully in this period Lewis's internet connection settles down a little bit. How well does the current regulation environment support digital wallets as opposed to the payment mechanisms that are used by those digital wallets?
So, thanks, Stuart. In general, I think it works pretty well, but with a couple of kind of really important caveats. So, when we're talking about wallets from a regulatory perspective, you've got really two very distinct camps. You've got the staged wallet, which is the one that you load funds into. From a regulatory point of view, that tends to be e-money. So you have to get authorized as an e-money issuer and comply with all the rules around that. On the other side of the fence, you've got the non-staged wallets, the pass-through wallets, which are in most cases some kind of mechanism of data storage, data transmission, and authentication that sits on top of some other existing established payment process. So the Apple Pay, Google Pay, Samsung Pay, generally what's happening is they are not regulated as PSPs. They don't have to be, because all they're doing is they're sitting on top of an existing card process, and they're relaying data backwards and forwards and providing the tech that communicates to a payment gateway. Well, this is the person it is. This is their these are their payment details, and then going through that authentication process, say, yeah, this is genuinely them. So
it has changed it a little bit, though, hasn't it? If you think about the old days, you walked up to an ATM and you typed in your PIN. Your bank would be doing the authentication that Hugh is Hugh and Chris is Chris, and you know, Chris's PIN and Hugh's PIN. What has changed in this case is that, you know, for example, Apple, they use their technology, whether it be Face ID or in the case of some of the others, it's fingerprint, to authenticate the customer on behalf of the bank. So they are doing some slightly different roles to the way in which the payment rails used to work.
yeah, I'm not saying it's exactly how it used to work. What I am saying is that the regulated bit sits underneath and still works in the way that it did. What Apple and Google and the others are doing who provide these wallets is, you're quite right, they're working for the banks. They are a technical service provider to the banks, performing those bits of those processes. And it's those processes that I think are at the core of what digital wallets have become. And the word that keeps coming up is convenience. And I think that's a huge part of what digital wallets are and what their success has been built on, is the fact that if I'm a shopper and I'm trying to pay for something, do I go through the process of typing out 16 digits, 4 digits, 3 digits, name, address, or do I just want to do something where I can double click on the side of my phone and do Face ID? It's going to be the latter one every time. So in terms of the actual payment processes underpinning the transaction itself, regulation works pretty well for that. The regulation works pretty well in terms of that technical service provider exclusion and how the banks work with and the issuers work with Apple and Google and so on, that works pretty well. The bit that I think has become slightly problematic is that precisely because there's such high market penetration of the people who operate those bits of super convenience that merchants and consumers really like, it's reaching a point where if you want to launch a wallet and you want it to compete with what has become increasingly prevalent as methods of payment, you've kind of got to be using those methods. So you've got things like SCA, strong customer authentication, those rules, and the vast majority of the regulations are designed to be technology agnostic. But the fact is, when you've got one thing or a handful of things that have such high market penetration, it becomes almost not technology agnostic anymore, because if you want to effectively compete in the market, you kind of have to be using all of those things. And that's where I think some of the problems come up. So I think to kind of circle back to your question, the regulation itself for the payment part of it, I think works fine. But I think the competition element of it, precisely because of its success, has to be addressed in terms of access to those authentication and communication mechanisms, things like the NFC, things like the biometrics, that are the things that make wallets so useful and so competitive in the market.
So when I listened to Mike and on his issuer section, he was telling me how difficult it was as a merchant, as an issuer, to actually get consumers to adopt the technology. And in order to get consumers to adopt it, you've got to get merchants to adopt it. So I think what you're saying is that the regulator is right to be concerned about this and the market power. And in that context, how do you think the regulator is likely to view the concerns of the issuers when they say, some of these players have got too much market power?
I think there's the PSR consultation paper, a request for information paper that came out. And I thought that made a really interesting read, because you can tell from the sort of tone of that, that they've heard the issuers already. They're hearing a lot of these concerns. There's a lot of mention of account to account. There's a lot of mention that Apple gets mentioned a handful of times, and the regulatory enforcement that's happened in Europe, for instance, to open up access to the NFC chip. My read on it is that they're not necessarily particularly concerned about the payment side of it. They're more concerned about the competition side of it, and they're looking to team up with the CMA to try and open up that market, precisely because there is such a market concentration. And
let me pick that point up, if I may. And I'd like to go back to Lewis. Welcome back, Lewis, and apologies I had to cut you off, and I'm very pleased to see you back. Hopefully we can hear you now.
I think so. I hope so. Yeah.
All good. Thank you very much, Lewis. Lewis, account-to-account transactions really crucially represent an opportunity for merchants to reduce the cost of card acquiring over some of the legacy networks. Why do you think digital wallets have been so slow to adopt account-to-account payments and merchants to use them? Hey, Lewis.
I agree. It does represent a major opportunity. I think there's a few reasons. I think one, let's try this with the video off. Who would have thought? Technology letting us down, eh? You can hear me okay, yeah?
Yes.
Okay, let's try this. So, yeah, look, I think there's a few reasons why that is. I think one is, as we touched on here, just card payments works really well. Especially with tokenization. I think, and look at it from a UK perspective, it's seamless, it's embedded. Just look at the Amazon effect. That's a really, really hard thing to dislodge. Look at how well Apple Pay, Google Pay have done the kind of pass-through wallet piece. So, these are really trusted brands, processes, etc., that people are really accustomed to. So there's one, it works so well at the moment from a card perspective. Then you've got the issue around the perception of limited consumer protections. You know, with cards, we've got chargebacks for fraud protection, and I think A2A needs to move away from the perception that it doesn't offer the transaction security or the ability to dispute charges. And especially if you think about where account to account is used, it's generally with retailers or brands that you're maybe not transacting with as often as you might do where you've already got your card tokenized within that checkout, for example. So there's that. You've got the challenges.
Lewis, is that the fault of how it's marketed? Because I've certainly seen it marketed to merchants that, oh, good news, account-to-account payments don't have any chargebacks, and therefore it's great for merchants. Yeah. So have they got the balance wrong somewhere?
Maybe. I think it's maybe more on the side of just how well the schemes in particular not so much promote or push the chargebacks, but maybe how well that's understood by consumers, how well that's trusted. I think there's probably not a single person on this call that hasn't fallen foul to an occasion where you would need to call your card issuer and request a chargeback. And probably fair to say in most cases that goes really well. So I think it's that whole, if it's not broken, it's sort of hard to fix. And there's nothing quite as emotive as fraud and money. And in such a card-centric country as UK, I think it's that side.
One of the things that I find strange from a merchant perspective, Lewis, is that the liability shift, the who's responsible for a transaction, is actually different from one card scheme to another. If you do an Apple Pay transaction, the liability is different for MasterCard and American Express, and I think Discover, but I'm less clear there.
Yeah.
May correct me. But you get a liability shift if the cardholder has authenticated the transaction, but actually for Visa you don't. Do you think there needs to be some standardization here as part of this process?
Maybe, but again, it's perception. And I guess if we're thinking of the question of why have wallets been so slow to adopt A2A, and then think from the consumer perspective, we may know on this call around the difference, 90, 180 days differences between, say, Visa, MasterCard, etc. I think purely from a consumer perspective, the view is very simply, or if I pay for my holiday on my credit card, then I'm protected if something goes wrong, that airline goes bust, whatever. And yeah, there's a really good example. We've had COVID, we've had all the issues there with travel for that, and people have felt protected from that. So I think, does there need to be standard? I think, not quite answering your question, I guess seeing more from a perspective of why the adoption has been slow, or seeing it from a consumer perspective. I'm not necessarily sure there does need to be a change of message if the consumers understand it the way it is.
Thank you. So I'm going to go back to Chris now, and thank you, Lewis. And that was much better, by the way. We really could hear you this time. And I want to pick up this point of regulation. We've talked about the potential to increase competition by opening the technical capabilities that are currently closed to UK issuers in the case of Apple, and it varies by in terms of the tech stack, exactly who needs to do what. However, as Mike has said, it then becomes a possible option, but it may not be a realistic option. As Mike was saying, he opens the box every 2 or 3 years, he has a look inside, and he still decides it's still a painful, expensive process with a negative business case, paraphrasing his words. Mike, please do kick it in if I've misrepresented you. So is what the EU have done and what might be the model here a sufficient to actually in practice open out the opportunity for real competition?
I think it may be, but not on its own. So you made a very good point about Klarna. So Klarna's managed to get its button all over the place. precisely by offering a different business model. Any kind of consumer adoption needs some kind of additional convenience or reward to drive consumers to use it. I think the issue at the moment is that, and Klarna's done extremely well to get as far as it has, but it's done it almost in spite of those barriers. It feels to me a little like the technical issues, that the technical barriers are sort of gating issues, and if you don't overcome those, then you're going to have to go so much further in offering some other convenience or reward to get people to adopt it. So I think to remove those barriers will assist in the creation of other options and the adoption of other options, and will essentially allow people to go to market more effectively and put those in front of merchants and therefore ultimately consumers. Without those things being sorted, though, they're always kind of starting from sort of 20 meters back in the race, because it's just going to be so much easier in many cases for a consumer to use an existing wallet. Ala, what do you think on that?
Yeah, I agree. I think the recent call for information by PSR and FCA indicates a lot of focus on competition, innovation, and consumers' choice and protection. It's very much at the heart of that call for information. And I think FCA would be very interested in the issues around how digital wallets may impact competition in the supply of financial services and overall operational resilience as well, systemic safety of the UK financial sector, the services sector. And the PSR focuses primarily on consumer choice and giving more optionality. And that focus on account-to-account payments is very clear that we're looking for more alternatives in terms of payment types. But I agree with Lewis very much that we do need to make account-to-account payments safe and secure, and we need to ensure that protection is embedded, and it's not just an account-to-account payment without any purchase protection, for example. I think the recent call for information was focusing on 3 specific areas. If I could just recap, one is, are digital wallets working well for consumers, businesses, and other users of payments? 2 is, are there any disincentives or other barriers to digital wallets integrating account-to-account payments? And 3 is more around, do stakeholders consider digital wallets raise any significant consumer protection or market integrity issues? So it would be interesting to see what the outcome is and how, if we can achieve regulatory parity. I think that would be probably a good outcome for the industry, if we can have a regulatory landscape where we apply the principle of same activity, same risk, and same regulatory outcome.
It feels like to me, and correct me if I'm wrong, that the work that has been done on promoting competition with account-to-account payments, that the regulator actually feels like it's been blocked by the digital wallets. It's like, oh no, I spent all this time building these rails, and it's all fantastic. Oh no, it's not. And now they've had to move their focus. We've not really talked about anything specific that we need to do with account-to-account payments for actually the digital wallets. Is there something that we need to do? Is the answer they need to get paid a commercial framework to encourage them to do it? You're an independent consultant, Ala, and you talk to lots and lots of people. Putting your independent consultant hat on, what's the magic answer?
I think I'd like to use often Brazil as an example. I think in Brazil this year, in 2024, 4 years into the sort of Pix journey in Brazil, they're launching a new feature, which is AutoPix. AutoPix is effectively access to account-to-account payments through your mobile phones. What does that mean? That means that the NFC access is open to all the providers in the market. It's not something that happens in the future. It's happening here and now, and it's the present. It's not the future. And I'd like us to perhaps, look at the lessons learned and the best practice that we're seeing elsewhere. but obviously we have different market context, different dynamics. And ultimately, I think we will need to focus on the consumer needs and preferences. And I think, Mike, you made it very clear that the adoption is the ultimate measure of success, how merchants and consumers are going to adopt it. So yeah, super excited about the Autopix launch in Brazil. And so that would be a very good proof point.
Do we have any early read about consumer early adoption, or is it just too early?
I think in the markets outside of the UK, I think we've seen some great examples. I think if we look beyond digital wallets, the monthly transaction volume in Brazil is 5.5 billion transactions of account-to-account payments. That just happens overall. So I'm not talking about digital wallets as such, but the scale of the adoption of real-time payments globally is phenomenal. And I think that trend will continue into the future. What we need to have is more protection, more security, more fraud prevention. And this is what we're working on as an industry, I think. So I think we're moving in the right direction. And I think if we can partner with big tech who facilitate payments, I think that will be a good outcome.
I think those are really interesting points you raised. I have in my mind, as I think about it, Zap. Anybody remember Zap? The UK company that set out to try and do account-to-account payments that got bought by MasterCard and now is branded, I think, and please do correct me if I'm wrong, I think it's called Pay by Bank. And I'm willing to bet, because I know MasterCard really well, that it's got super security and they'll obviously put their brand all over it. But those two things aren't enough in order to get people to use it. You've got to have this, the virtuous circle. Did you get consumers? You've got to have merchants. You've got to have merchants to get consumers. And even a company such as MasterCard is really struggling to get a new account-to-account payment scheme off the ground. I recall way back when I was much younger. Do you remember? Does everybody remember the Internet Explorer issues, where Internet Explorer from Microsoft had the monopoly, pretty much, of the browser on the device on your PC, because it was all about PCs in those days. Showing my age. What the US regulator did was actually quite powerful intervention, because they actually insisted that not only did the consumers have to be presented choice, other browsers could exist, and in this case, actually there were no technical limitations, but that when the Microsoft operating system was loaded, that then there had to be a forced choice. The consumer had to be offered other browsers. Is that what we're going to need, Chris, to level the playing field when we gave access to the NFC? Does it need to be more than just the technical?
A very interesting question. It may not have to be quite as big as that. I think, as I was saying before, I think you've got to remove the barrier that it's only through those channels that you can get the secret source of convenience that makes it all work. If you think about it in the context of things like BNPL, so BNPL regulation in Sweden, for instance, I think that there was a law that said that the BNPL button it couldn't be at the top. It was something like that. There was an ordering thing. So it's a similar kind of idea. It's about presentation to consumers and forcing that choice in some way. Actually, just thinking about it in terms of your previous point about what is it that is stopping the account-to-account from really taking off, that adoption thing, I do wonder if there's a parallel here with contactless, for instance, and there are lots of other parallels as well. Contactless have been around for ages, but there are stats that show that in every country where contactless has taken off, the thing that's made it take off is where it starts to be used in transport for the first time as a means of transport. Now, if you think about account-to-account, like JRock has been doing loads of stuff to try and come up with a sustainable commercial framework and a dispute resolution mechanism. That's all good work and is continuing, and I do think that's important. But actually, I think we payments people think a lot about dispute resolution and liability and that kind of thing. I'm not sure that many real world people do when they're shopping online. They're thinking
we are that
more,
sad, I know. Yeah.
They're thinking more about what's the easiest way for me to do this. Now, at the moment, if you're faced with a button that you don't know and you're not quite sure what that is versus actually I can use Apple Pay and pay for this right now, I'm probably going to use the latter one. But I do wonder if there's a case for there being a number of use cases that everybody uses that will actually get everybody used to the idea of account to account, and that will actually spur on that adoption. So HMRC used it. I think they used EcoSpend as their open banking payments provider at the beginning of the year to make payments. And for a lot of people, like being an open banking nerd, I asked random friends on it. It's like, did you have to do a touch thing? How did you pay? So I did that thing. It's like, did you know that was called open banking? They had absolutely no idea, but they said, oh, it was really convenient. I really liked it. But they're not seeing it anywhere else. I wonder if there are going to be a couple of use cases at some point that really promote that adoption, which I'm sure will be bolstered by things like dispute resolution, but they will also be bolstered in a wallet context by being able to use those other mechanisms of authentication and ease that people have got used to with things like Apple Pay.
Thank you. I'm always surprised, by the way, just how hard it is to buy a car using my card, because the interchange rate is an ad valorem rate. When you get to something that's quite large, in order to buy a car, very few people actually enable you to pay for using your debit cards, and it's an ideal opportunity for open banking. Those higher ticket payments, those more than £5,000 payments, and there's a whole range of those, but they're not very frequent. The problem is, I wish I could pay more than £5,000 every day. Of course, I just don't have the readies. Because so one of the things that the transit did is it gave you that frequency, that payment habit that got you trained. You didn't need to load it, learn it. Sorry, not load it. Learn it every time. You just did it and did it and did it and did it. The example you've just quoted, which is a lovely example, by the way, gets you past the hurdle of once.
I think that's completely right. I mean, if you think about how many places now say that actually we're non-cash, how many places you go to, small market stalls where they've just got a contactless terminal, or they're using Square, whatever they're doing, and sometimes even kind of the mobile itself is the point of sale device. There are existing open banking based payment solutions out there that tend to work on the basis of QR codes. And even with a QR code, which is not a terrible piece of UX at all, you've still got to open the camera, you've got to do that, then you've got to go through it. That's a different level from actually I'm just taking out a physical card and tapping it, or I'm taking out my phone that has my digital wallet in and using the NFC, which is why I think the Pix, the Auto Pix example is such a strong one, because it's through that kind of functionality and that additional ease that you start to get to a point where it's viable for people to be doing those kind of multiple times a day transactions that really drives the adoption.
And back to Lewis. I know Lewis, you support a wide range of APMs in a number of markets across Europe. Why do you think that the APMs have been more successful in Netherlands and so relatively less successful in the UK?
Yeah, again, I think it comes back to, let me switch the camera off in case it goes haywire again. It probably again just comes back to that again from the consumer experience of it being really well embedded with cards, and that, if it ain't broke, don't fix it kind of thing. Again, I'll come back to the Amazon example. I go on Amazon and my card is lodged there, it's tokenized, I pay one click. Why would I pay a different way? For all the convenience reasons, the trust reasons, the brand reasons, the familiarity reasons that we've kind of talked about on this call. And I think Chris made some really good points around that, thinking of it from that merchant adoption piece. And I wonder, HMRC is a really good example. Monzo is another with open banking. They've built their whole kind of neobank prepaid card top-up model on open banking. The only way I can top my Monzo card up is via account to account via open banking. And yeah, I don't know how many cards Monzo issue, but with Revolut, they're the two biggest kind of UK brands in a very quickly growing fintech space. And I wonder if there'll be, I wonder if those are the kind of use cases that will drive higher adoption of A2A or familiarity with A2A. Because retail, we're used to using cards. Actually moving money from bank accounts or financial institution to financial institution, our own personal money, we're probably more familiar and comfortable as consumers with doing that using a bank transfer or some kind of non-card payment method. So maybe it's that will that will drive some more adoption in UK of non-cards. But I think it really just comes down to it works well now. So where is that gap to change it until all of those conditions are right?
Thank you, Lewis. If I can go over to Mike, so in the US, you've obviously got a number of payment person-to-person payment methods that have successfully started, particularly focusing on open banking. But you've also got some issuer wallets, at least you did have. I think there were some from Citi and Chase that have gained a reasonable amount of traction. Any lessons from the US that you think might be appropriate for us here on this little island?
Yeah, I mean, I think so Chase is the largest bank in the US in terms of customer accounts, and their attempts at wallet have not been successful. And I mean, they have a lot of capital, a really large installed base. And so that's where some of my skepticism about, or just experience with how challenging it is to gain that adoption for those wallets comes to mind. But, again, I think opening up the technology to allow for competition is healthy in that at least it can force the incumbent leaders to continue to innovate. And I think Apple has introduced connected cards and bringing in some of the banking experience and pay with rewards and things like that. There's digital identity that's also emerging in a lot of markets that I think is going to add to the utility. So anything that helps to push and prevent complacency from the leaders in this space, I think is healthy. But just going back to changing that consumer behavior, I think that's a hard thing to do because it's just really convenient now, right? You buy a new phone, you click a couple of buttons, and there's less and less friction in that experience every day. It's just hard to change that behavior without intentionally introducing friction into that, and then the regulation potentially are the ones harming the consumer. So I think it's a really tough problem to solve. I do not envy the regulators in trying to evaluate this space.
That's really fair, and I think we should say that one of Apple's big pushbacks against the opening out of the NFC was that you don't want you tap and then you have to select which wallet you are going to pay with, and then you pay. They really want it to be a fast payment method. Although you could set defaults, but that's been their big thing. Exactly to your point, Mike, about keeping it convenient. So I wonder if now, Alla, we could now go back to you and say, so we've set out the picture. This is where we've come from. This is where we are. Where do you think we're going with all of this?
I think from a consumer and merchant perspective, I think we're going to see continued rise and widespread adoption. I think I would expect to see even a lot more choice in terms of payment methods or value-added services that come along or sit alongside the payment initiation. And I think I do hope that following the regulatory analysis and consultation, we're going to see some interesting or meaningful proposals around leveling the playing field across the industry, because we do need to make sure that we drive competition, innovation, and consumer choice. And in my view, consumer protection will remain top of mind.
I think there's a really fair point. I hesitate to ask, but because we've been focusing very much on domestic UK. Do you think that that actually the answer needs to be cross-border as well? I
think we might see some sort of convergence between domestic and cross-border as all payments are becoming more instant and real time. So for sure, I'm sure we're going to see a lot more innovation in terms of international payments.
And then finally, team, we've really focused today on two main sets of rails. We've focused on the card rails, and we've focused on the A2A rails. What about the prospect for cryptocurrencies, stable coins, digital coins, central bank digital coins? What do you think, Chris? Are these actually the things that are going to level the playing field?
Yes and no. I think if I go back to that core point that a wallet is in essence a representation of a gateway to some underlying other form of process. If you're dealing with stable coins and the regulation around those and the mechanisms for transferring them are easily enabled through wallet functionality, then I think it's just another form of payment rail that works underneath those storage, communication, authentication mechanisms. That said, because aspects of those are less regulated, it could be actually that it's easier to do some of that authentication within current regulation than it is with payments, for instance.
Super. Now, we're just coming up on the hour, and I'd like to take the time to thank each of our presenters, Alla, Mike, Chris, and Lewis. Thank you all very much for this deep dive discussion into the worlds of wallets hosted by the EPA. I'd now like to hand back to Kate to bring us to a conclusion. Over to you, Kate.
Thank you very much, Hugh. And thank you to all of our speakers. That was a really insightful and an interesting session. And thank you to all of you as well for attending today's webinar. If you do have any questions, please contact christina.gatens@thepaymentsassociation.org. We will be sending around a survey on the webinar. We'd really appreciate it if you could complete this and provide our feedback. That's how we improve. You will also receive a follow-up email within the next 48 hours, which will have a link to view the recording of today's webinar, which you can also share with any colleagues that couldn't make it today. On behalf of the Payment Association and our sponsor PaySafe and our speakers, thank you so much for joining us today and have a great rest of your afternoon. Thanks very much.
Thank you.